Hey everybody, welcome back to another dividend investing video. One of the absolute greatest ETFs for dividend growth investors, in fact the greatest in my opinion, is the Charles Schwab Dividend Equity ETF, ticker SCHD. It hits that right combination of 3+% yield along with double-digit dividend growth. It's a way to simplify dividend investing. 2023 is going to be a year I go quite heavy on this dividend ETF, and in today's video I'm going to show you why that is, along with my plan for building up a position in this fine equity, and of course I have a spreadsheet. I'm Nick and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru, just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could please do me a favor and smash the like button and subscribe to keep up with future videos. This helps us out more than you could imagine in bringing you quality dividend investing content. And a quick thanks to all my new subscribers for getting us over the 8,000 subs mark this week. We are just getting started and I really appreciate all of the support. So today's video is actually the second video of my Roth IRA Investing Series, where I'm going to make all of my Roth activity transparent for at least 2023. Accumulating SCHD is a major part of this plan. Now, SCHD is such an easy way to get started with dividend investing. You have instant diversification with 100 companies in the fund, very low expense ratio with 0.06%. And what this means is that you'd be paying $6 in fees for every $10,000 of SCHD you have invested. And that's just peanuts, really. Now let's look at the top 10 holdings of SCHD where it stands today. These are some fantastic dividend-paying companies. The top two positions are Verizon and Broadcom, both making up nearly 4.5% of the fund. The next 8 positions make up roughly 4% each. That's Merck, Pfizer, Texas Instruments, Cisco Systems, Coca-Cola, Pepsi, Home Depot, and IBM. And these top 10 companies make up 40.45% of the entire SCHD fund. Let's dig a little deeper because there are 103 positions in the fund. Let's see the companies in the 11th through 20th places and what that takes up. So the next 10 positions in SCHD, so the 11th is Lockheed Martin Corporation, then BlackRock Inc., Amgen, Automatic Data Processing, Altria Group, EOS Resources, 3M, Illinois Toolworks, US Bancorp, and Valero Energy Corp. And those 10 companies take up 28.58% of SCHD. So altogether, the top 20 stocks make up 69, almost 70% of SCHD. That's pretty concentrated, maybe not as diversified as many other funds, but this is an excellent mix of companies, and I think the fact that this is not as watered down as a lot of other ETFs could be why it has been so successful. I mean, you have a really great mix here. You have some high yield with your 3M, your Altria, your Verizon, your Pfizer, IBM. Then you got some really high dividend growth stocks, like you got your Amgen, your Home Depot, your Broadcom, Texas Instruments, Lockheed Martin. These guys are growing these dividends at a very fast rate. So when you combine these two together, this is what you get. Currently, SCHD is yielding 3.3%, paying out roughly $2.56 per share annually. Now, this amount does change. Every quarter, the payment's different. But the 5-year average annual dividend growth rate is 13.74%. So this is growing very fast. It's very easy to see why this is such a beloved fund for dividend growth investors. And let's also see how SCHD has performed as far as its investment. Currently, we are in a bear market, and SCHD is outperforming the broader market, the S&P 500, as we would expect, right? Over the last year, SCHD is nearly flat. It's down about minus 1.5%, while the S&P is down over minus 15% for the last year. And I'm recording this video a little more than a week into 2023. SCHD's total return also outpaces the S&P in the 5-year, returning 75% over the last 5 years versus the S&P 500's 55%. But notice that during any bull market over that period, the S&P was outperforming. And in the 10-year total return's the same. You'd be up 263% on your SCHD, and this does include the dividends received. Compare this to the 223% from the broader market. But again, I don't want to mislead you and make you think this is going to outperform in a bull market, because it's probably not going to. But it still holds its own, and it pays very reliable income, which is really why people own this one. And it's easy to see why it's so popular. Around New Year's, I noticed many of our followers and friends and dividend enthusiasts on Twitter promoting various SCHD challenges like the ones I'm putting up here on the screen. And I love to see stuff like this because it motivates others to take action. One big challenge was started by Disney Beach LV. It has folks buying $1 the first week and $2 the second week and increasing by $1 every week. And that's something that I think just about anybody can get started doing, right? Then others, such as the Dividend Dentist, are buying SCHD every day, and they're going very heavy on it. And so dividend investors are pouring boatloads of cash into this dividend ETF. Myself, I am planning to invest over $5,000 into SCHD over the course of 2023. I'll show you how I'm doing it. Now, first, you have my Dividend Growth Income portfolio. This is a portfolio I started specifically for this YouTube channel to build up a dividend portfolio and let you guys watch it as it builds, right? It's actually kind of an experiment in dollar cost averaging as well. Now, I'll leave a link in the description to a playlist, and you can see how that portfolio is progressing. It's not very large at the moment. It's like we're just getting started with it with weekly consistent contributions, okay? But in 2023, I do expect I'm going to be buying a minimum of $100 worth of SCHD in that account every month. So that's about $1,200 right there. That's one of the accounts. But where I'm going to be buying a larger amount this year is in my Roth IRA. And the plan is to purchase one share of SCHD every Monday or the first trading day of the week, regardless of, the share price or what the markets are doing. I'm just going to consistently buy every Monday. So with all those other SCHD challenges out there, this is the one I'm doing. And by the end of the year, my Roth IRA will have 52 shares of SCHD, and I estimate that's going to be about $4,000 worth of SCHD just there in the Roth IRA. So between that and my Dividend Growth Income portfolio, we should have well over $5,000 invested in SCHD here in 2023. So I'm going pretty heavy on this. And here's the plan to do it here. I fund the IRA with $125 every single Monday. Doing so will ensure that I max out the Roth IRA with its max contribution limit of $6,500. Now, this is the plan, assuming I don't lose my job or something crazy happens. So on Monday, I'll purchase one share of SCHD. And this is going to leave around an additional $200 or so at the end of every month out of my contributions. And with those funds, I'm going to put that into real estate investment trusts at the end of every month. And if you recall from our last video on Roth IRA investing, the Roth is really ideal for these types of investments because of the non-qualified dividends they pay. Those are taxed as ordinary income, and in the Roth, they're not taxed at all. So I'll put any dividends received towards these REITs as well. And right now, this Roth, I started it in 2021, and I have 2 years of maxed out contributions. So right now, it's bringing in like $40 a month in dividends. So in reality, we'll be investing about $250 a month in REITs. And again, if you want to see the top holdings in my Roth currently, the link in the description for the video on the first Roth IRA in this investing series is there. It's important to know that SCHD doesn't actually have any real estate exposure. So this is the perfect mix for me. I really like this balance. Here is the spreadsheet I'm working on for sharing my Roth IRA investing transparently with our friends and viewers here throughout the year. My first column here handles all the contributions. Like I said, I'm adding $125 every week. And this is the easy way, I think, that just about anyone should be able to max out their Roth. And here I have it nicely showing how much has been contributed and how much is left to the limit. And if you're young, and I'm talking like your teens, your 20s, you think you can't set aside $125 a week? There's many things you could do to come up with that kind of money. I mean, you could deliver pizza for one night a week if you have to. It's that important for your future. Make it happen. Anyways, this next column here is where I'm going to add in the dividend income I receive, including interest and rewards the account generates every month. Now, to start, we had about $4 in cash carryover from 22, and so far I've earned about $10 in dividends in January. And the rewards, they come from an American Express credit card that Charles Schwab partners with, and I have the rewards put in my Roth, and that'll probably end up bringing in an extra $10, $20 as well every month. Basically anything that I don't contribute directly. 2023 cash in here represents the contributions plus all the additional cash from dividends, interest, and rewards. And my next column here is going to be where I'm going to log my weekly SCHD purchases, where I record the purchase price. And you can see in the next column how it tracks all that real nicely. Our cost basis with the gain or loss there. Also, the forward income from our SCHD position. And I also added a place to tally the dividends we collect throughout the year in SCHD, and it's going to be nice to see that number grow over the course of 2023. And then the part I'm still working on is how I'm going to track my REIT purchases. I'm going to be focused on 3 or 4 different REITs throughout 2023. I'll use whatever cash I have on the last Monday of every month after my SCHD purchase to buy my REITs. And the next time I post a video in that series, it'll be a status update on the Roth after January, including the REITs I purchased. So I'll show you that then. This video will be coming out around the beginning of February. So right now, it's looking like in my Roth IRA, I'll be allocating my 2023 contributions like this. $4,000 roughly towards SCHD and $3,000 towards my real estate investment trusts. And I'll post the monthly videos to let you follow along. And that's it, folks. So I'm going to be buying about $5,000 worth of SCHD this year in 2023. I'm super bullish on this ETF. I love dividend growth stocks, but I also love the simplicity of buying this one nice fund that seems to have the right mix down already. So we're going to keep building this up into a significant position. If you're still with us, please do me a favor and smash that like button. If you aren't yet subscribed, please do so. I'm trying to get to 10K subs before the month of February. And also, if you aren't following me on Twitter, the name is @DivGrowthIncome. Give me a follow there and let's connect. I do enjoy speaking with like-minded investors. And until next time, folks, keep investing.